Everyone, Mike Fairborn here. Welcome back to Markets and Sectors. It's great to be here with you today, folks. Plenty to discuss as we look at markets and sectors. We look at trends, support, and resistance, and ultimately we break it down to individual stocks that might have been in the same line in terms of an upward trend in the market, trend in the sector, industry, and finally the stock. So we do like to do top-down analysis here as we do look at example trades as well. But plenty to discuss. I've got some details for you. I've kind of broken down what has been reported today in terms of the FOMC meeting, and I'll look forward to getting into details with you on that. So welcome to all of you, but that is what we do in this class. So I wanted to kind of highlight, we do look at big picture, we drill on down to the small picture, ultimately stocks, and we look at some of those companies for potential trade examples in this class. So I'd like to welcome you all, folks, and hey, welcome to, let's see, recognize plenty of names here. We've got Greg, Beth, good afternoon, Beth. Wrong, Jay Richardson, Roy, Life in the Fast Lane. We've got some good titles out there. Good to see him back. We've got Will, Mighty Mouse. Great to see you, as well as I'd Never Eat Here. Speaking of good, interesting names to utilize here. Hello to you, Sharon, as well. I'm joined in the chat by a great friend of mine, Cameron May. Folks, you can follow us both on X, and Cam has posted that at the top of the chat box, as you can see down there in the chat. You follow Cameron at Cameron May. It's got to be spelled correctly, folks. Cameron May CS, because we do have a lot of imposters out there. Be mindful of that. Mike Fairborn CS as well. Love to have you guys on board. All right. Well, hey, a few things to talk about, of course, today. So I want to jump right on into it. Let's start off with some disclosures to get going here. Now, information here is for general information purposes only. Schwab does not recommend the use of technical analysis as sole means of investment research. Okay, the paper money software application is for education purposes only. Investing does involve risk, including for some products more than your initial investment. Important to be aware of. Now, we do look at some of the futures charts, and I just wanted to state here, futures and futures options trading does involve substantial risk. It is not suitable for all investors. In addition, past performance is no guarantee of future results or success. Now, because many of you are new, and welcome to all of you that are able to join in on this promoted class here with us today, but I just wanted to let you know that as we look at this each and every week as we go through this class, a couple of key highlights to note here for you. So we do review market and sector trends. I also mentioned that we do some stock trade examples within this class each and every week as well. But as you can see up top here, yeah, we are focused in on underlying trends. What is the underlying trend of the market? A lot of times if the trend of the market is up, you might have heard this term before, but it can lift all boats. Not all, but maybe a lot of boats. I mean, if it's lifting the S&P 500, something of interest to be mindful of there. We do talk about identifying support and resistance levels. We do frequently discuss chart patterns when they represent themselves. Chart patterns are always interesting because you do get this price projection level too that a chart pattern can give you. And we do use plenty, as you'll see if you are new, and I know many of you that are not new, that have been here many times before. We definitely hit the technical indicators for insights, and today will be no exception. Now, I'm not going to go through each one of these. It's very, very similar to what we just talked about in terms of the market. But we also look at sector trends, and I'll share with you too in the class a sector trend perspective to look at as well. Okay, well, that is the stock. We're going to start off with just the general market here first. I did want to talk about the Fed announcement. It was highly expected that there would not be an interest rate cut today, and so I wanted to mention over here just a couple of quick notes on the S&P 500. It's always good to just get a general sense of what's been going on with the market. I think the expectation was kind of built in that we were not going to get a Fed cut, and you can see we're still holding very close to that 6,000 level, a level, folks, that has really been in place for quite some time. And you can see over there that yeah, you know, we're kind of just holding that level. I would say that it's all else equal, a positive trend that we have broken up a little bit higher, but we'll see what ultimately does happen here. Also, a note, I'm going to clear this off and just show you. Yep, okay. Sorry, just had to do one thing on that. And what I'm going to do is go back over here and just look at the up and the total volume that we've got in general. And there is a symbol for this, although we do not get total volume on the S&P 500 during the day. We don't get up and down volume just as it shows. We do get a read at the very end of the day. That is the symbol. Now it's a long one. I'm going to throw it in here just so you can see it. And I like to do this sometimes. I'm going to put this right in the chat box. We do have a number of these, and there it is right there. But that's the total volume on the S&P 500. And you can kind of see that it's kind of stabilized. It was going down for a period of time. We'll see that if it can start to build up as prices might go higher, a lot of traders will look at the S&P 500 index to see if we're going to get strength on the breakout. And I've referenced this a few times. I know many of you haven't seen this yet. Let me just quickly show it to you. This is the E-mini S&P 500 futures. Now, it does collect volume, and volume that we can actually see. In fact, you can see that volume right down here. And if we take a 1-year perspective of that volume, a full 1 year, 1 year over here, and we say, where did the majority of those trades come in at? At what price levels does this volume over here equate to? The great thing is, if you haven't used it before, we have this volume profile tool. And as I click on the drop down here, under this little dropper icon, you can see we can add in any of our indicators that we want very, very quickly. So let's just do that. Volume profile, let's just see how we're holding up here. I just typed in volume P. I'm going to make a quick adjustment to it. This value area percent, I just want to see the top 10% of volume as opposed to 70. Let me hit the number lock. There we go. And as I make that adjustment, that you can see for a while now, that red line represents right there the point of control. And that is the highest number of volume coming in at that trade, at that price that we've seen all year long. Okay. And that represents resistance if we're below it, or support if we're above it. I have to say, support if we're above it. Let me change some colors here just real quick. Here we go. Support if we're above that level, resistance if we're below, folks. And where might we land? We're so close to it. I mean, today, I guess you could say right now it is resistance. But basically, there's a lot of trading activity right there at that kind of peak. Now, it does edge off right there. A lot of volume edges off over the last year because these are all-time highs. So if we can break above, what this might tell us is we might be stuck here, holding at this level, resistance below, support above. But if you can get above these all-time highs, there might be more ability for prices to run more quickly, is what the volume profile. And I'm telling you, you just wouldn't know it. You wouldn't know it if you don't have an indicator like this. But we're trading right at the biggest trading range of the year using, we're referencing the E-mini S&P 500 index futures, but it's still on those same 500. Okay, very cool. So there's a lot of interesting things going on, and wanted to take a look at that. Okay. I wanted to just say that as you could see this, a quick note, as you can see over here, one thing is we do have the RSI, and the RSI has actually been holding up fairly well right through here. And just wondering, it's holding some levels. We're not really dipping that much, but sometimes it can give an earlier indication that we might be breaking out. One quick way to do that, that I've always found, that a lot of traders will use, is that downward sloping trend line right there. Right there. Do you see that coming down? What do you think? I mean, if you can break that, that could be of interest. That is the ES. We're looking at the ES because sometimes futures are a quick guide. We might be getting something like that actually on our money flow as well. So just a read on volume. Money flow looks at volume. But if I come over here and pull this up, look at this. So if I draw this line in here, is that trend beginning to change? We're very, very close. In fact, if you start to break out higher on money flow, it just might mean that we're getting more buyers relative to sellers. Okay. Well, with that, I did want to talk about some of the Fed announcements. And I'm going to do this right now. I'm going to zoom into it. And I'm just going to take you actually to my X handle here, just so you can kind of see this. And in fact, I'll just throw this into the chat. If you're not following me, folks, you can just go right there. And again, Cameron May is Cameron May, CS as well. Love to have you guys on board. But I just want to throw that out there because I'm referencing this. Scoot on down with me here. And I wanted to highlight here what some of the notes from the FOMC. First of all, They kept rates unchanged. Those rates fall right now between 4.25 and 4.5, and that's for four consecutive meetings, for a fourth consecutive meeting. So they've held it that way for a while. It's been stuck there, right? It's at a higher level. And we know that, some people in the administration do want that to be cut. They believe so because Europe has been cutting their interest rates. Here are some quick notes for you, just so you have it. They do project from the FOMC, the Federal Open Market Committee from the Fed had noted that they project 4 future rate cuts over the next 3 years. Now, 4 of those cuts are in the next 2 years. I should have put this note a little bit higher. FOMC expects to make 2 rate reductions later this year. This year, I shouldn't say in the next 2 years, 2 rate reductions this year. So 2 of the 4 this year. So later this year, central bank expects inflation to remain elevated and sees lower economic growth ahead. Now, there is a great tool to look at right here on the Thinkorswim platform. You got to be on the platform to see it. I'm going to go into the Analyze tab. It's under Economic Data, and I'm going to go to the home page first. And I just wanted to state that this product uses Fred API, but it's not endorsed or certified by the Federal Reserve Bank of St. Louis, and it's not affiliated with Schwab. Okay, so we're not connected to it, but we do provide the data, and I just wanted to highlight that. Now, what I'm going to show you over here is if we type in, this is a great place to get all of the Federal Reserve data. Well, it is. I mean, I think it's all of it, but most of it, or there's just tons of it in here. It's from Fred, whatever Fred's got, I believe. So, sorry, I'm typing in Fred as I'm saying it. Fed funds rate. Gosh, I got to it. There it is. The Fed funds rate from the Fed. And there it is. This shows a history. My gosh, this goes back, I'm probably not interested. 1955. This is a trajectory. Yeah, rates were quite high. They were a little over 18% in 1980. Kind of a tough environment there. You can see, though, we've had a historically long period of lower rates that we had through this time frame, and then more recently, the spike up. So I'm going to zoom in on this and just show you, so you can look at any time, anytime you're looking at this, where you might want to consider these rates to where they might be at. And I've really kind of zoomed in, but that right there is that 4 consecutive meetings that we've held between that level. And that's kind of a range, just so you know. Right. So, let's see. So wanted to highlight that for you. And let's see, one more note here. I'm just going to pull one thing and then we should be good. Okay. Yep. Perfect. And we are good. All right. So that is that. There's a lot of good information in there. In fact, if you go to the home page, you're just going to see a lot of, you want to see CPI data, inflation data, all kinds of cool details. You can really knock yourself out. There's a lot more than what's just listed here. They have international data as well. I'm just going through that right now because we do tend to highlight that on this, in this discussion as we talk about markets and sectors. Okay, so with that, a couple of additional notes. I want to jump over here and come on over and show you some of the sectors here. Now, this is a sector grid of every one of the S&P 500 sectors, and you can see those listed right there. Now, these are great because you can come in and just zoom in on them if you want. I'm just going to right-click on my mouse. There we can go maximize the cell right there, and you can see what we've got. This happens to be energy, but it's all 11 sectors. I'm going to go ahead and click on my little arrow up top here to minimize the cell so we can see everything again. Now, if you'd like to add this to what you've got over here on your chart, let me go ahead and just share this with you. I'll share the grid. And here it is. And what you want to do is just take this and I'm going to send it into the chat. If you would like this, it's a really cool reference, I think. You can change the colors, whatever you want, but it gives you just a general sense of what's been happening with all the stocks in the S&P as they're categorized on a per sector basis. So there it is right there. So that link that I just sent into the chat, you can come up top here and go to settings. And by the way, if you're using a Mac, you're still going to see the wheel. You might not see settings. It might not say setup. I'm sorry. Setup, not settings. You see the wheel. Just click on the wheel. It's still going to be in the upper right-hand corner. Click it one time. Open that shared item. I'm going to just paste that in. There it is right there. Preview. Folks, if I click on import, I'm importing it as a grid. And then what you can do under charts, it will put it under this section here. So if I click on this icon right here, this icon that's just above, the dropper icon and the patterns icon right there. It's this one right there, right below this on demand. Then you can find it in there. And you can keep exactly what I build up here for you. By the way, it's kind of nice because down here in the bottom right-hand corner of the screen, we do have the S&P 500 index. So encourage you to take a look at that too. I mean, it's a great little reference. You can see what's leading in the markets. And a lot of times what you see leading here, that's where oftentimes you're seeing the strength in terms of stocks. Now let's scoot on over here and let's point out a couple of, energy has really been the strongest right here. You can see us breaking above some prior highs. Technology, which tends to go better in a stronger economy. We've seen that historically. We'll see, if that continues, but look at that move. Covering it up, aren't I, when I write over it? But there you go. It's a higher high, a higher low, kind of going sideways. Maybe it'll flag higher. Question mark, we don't know. Consumer staples has pulled back a little bit. Will that flag and go higher? Remains to be seen. But looking at this, a few of them that have been holding up the strongest, you have to say info technology, energy, of course, as of right now. Discretionaries have actually held really strong. Communication services, as well as utilities. There's a nice little sort of a triangle over here. Still clearing prior highs. Always interesting to see, right? If you see higher highs and higher lows, that can mean strength in the sector. And then we can pull companies right from that sector and see what has been performing. Now, as we look at these four, 1, 2, 3, 4, I guess, we've actually, financials have been strong, and maybe 5 over here. Look at this. The S&P has actually been holding up pretty well too. Still around that big number that we looked at, around 6,000. So it remains to be seen. Folks, there was one thing I forgot to do. Let's do it right now, though. I want to highlight just back here a final time on one of the tweets that I just sent out. This is the dot plot, and this is for the Federal Reserve data, their expectations. Let me just a quick note on this. This is the Federal dot plot. It's Federal Reserve data, but it is from Charles Schwab specifically. So I've captured that from our services here and shared that with you. And what this shows is exactly what the notes that the FOMC had stated here. Here is 2025. And these dots right here represent the number of FOMC members, where their expectations, where they stand, where their votes are, relatively speaking, towards the end of this year. You can see that the majority is actually below 4%. And that can be stimulative to the economy too. So that's where they stand right now, because remember, there is that expectation of inflation coming up as well. Look at 2026 with me. Okay, now you're getting the shift lower. 2027 even lower. So an expectation of lower interest rates, that can be positive. It can be conducive to more growth within the economy. The longer run, even smaller, but you can see that even next year, there is at least one individual that says real close to 2.5% expectation. Now these can change, right? But I'm just giving you what their assessments are. That's from the June economic projections. There's midpoint ranges right here. But remember, they're expecting 2 more this year. These things can change, but you can see how that does dip into the future. So that could be helpful for you. Again, let me just share this. If you're not following Cam and I on X, consider doing so, but I want to make sure you all had that, and it's right there. Yeah. Zink says, yeah, they are a little bit saucer type, aren't they? Or ships of sorts, and it kind of depends, especially, hey, if you got them in the middle. If you got plenty in the middle here, that does look a little bit symmetrical. I'm with you on that. All right, so very good. Now, let's go over here and we'll close this down. We talked about our sectors, and I want to break this down a little bit further for you and show you how we break this down into more detail. Now, before I go any further, though, Remember those initial slides that I'd brought up right over here? We talked about support and resistance, and if we're breaking recent resistance, that can be interesting. Another way to actually see which of these sectors, let's say, is trading above their 200-day moving average. Now, I could go in here and put a 200-day moving average on all of them if I wanted to. Like, say, for example, how is energy? Energy had the biggest lift recently. There's your trend. But the 200-day moving average is one that's frequently used. I've read this for years by analysts and big firms for, that might be one of the more common moving averages they'll use for, is it bullish? Is the market or is the sector bullish if we're above the 200? And is we're bearish if we're below? So let's just go simple right here. Moving average, I'm going to throw it on. Here's the 200 right here. Let's get a little bit of color to it. I'm going to put it in gold. We'll make it a little bit thicker. You can make all these adjustments right on the left-hand side. You could even change the style to kind of a dotted line format. There you go. That's where we stand. We're kind of at an interesting turning point on a lot of these companies and sectors. We're right at that level. Now, the question is, and one that I posed in my class yesterday, the swing trading class, was what's been strongest within energy? How could we look at this to get an idea? First of all, where's the sector strength, and then what companies are above the 200? Maybe what companies within the sectors that are strong are also above the 200-day moving average too. So I'm going to show everybody. I'm going to pause here. We're going to dive a little bit deeper into the condition wizard, so you can do this very quickly. And there is a method to my madness here, because I want you to utilize this across 500, 2,000 stocks, whatever. We're first going to utilize it against just the S&P 500 sectors. So what I'm going to do up top is I'm going to clear this guy off. We're going to keep the, we're going to go into the S&P where we want to scan in, S&P 500 sectors. We're going to do the simplest search ever. But we're tapping into some of these really great capabilities that we have on the platform. And we'll do this kind of discussion, week in and week out, but in this class. But you want to go to add filter next, study. We're going to put a study filter in. Now, there are about 3 steps, so I'm going to go through these kind of slow just so you can follow along. So we are in the scan tab. That will generally default into the Stock Hacker, the sub-tab Stock Hacker. Very, very powerful tool. So useful when we're doing sector analysis that rolls over into industries and rolls into stocks. So as we put up the S&P 500 sectors in here, what I'm going to do next, because since we put that in, we want to know what we want to scan in. We've added a filter, and it was a study filter. Now, the next step is, just to get to where we need to go, is we want to click on the pencil there. And we click on that pencil or pen. I'm going to pull this up. And this is so easy and straightforward. If you do it just a couple, 2, 3 times, folks, it just comes naturally. So let's go ahead and do it right now. In fact, I'm going to go over here and click on this and just highlight delete first. Now, I'm using a condition. Add condition. Watch this. I'm going to select it. All I'm going to say is price. I want price to be greater than the closing price, greater than the 200-day moving average. And what is the 200-day moving average? We've got price over here. We've got our condition, which is greater than, and it's going to be a study. And it's as simple as this. SIM, simple moving average. I just put it, you can type it in or scroll down, but simple moving average. And just throw in the simple moving average that we were looking at, the 200-day. A lot of traders will look at a 100 or a 50. Those are popular, 20, 10, 30. Many of these, but this is kind of this is a very, very common one that's used by, a lot of institutions. They've, I don't have anyone in particular, but it's mentioned a lot and I've looked at it. Now it's going to be within a 1 year time, a 1 bar. So are we currently above it or not? We could say over the last 3 bars, but we're just looking at if it's above it now. I click on save. Okay, and guess what? We're done. There's one last thing to click on. which is the easiest button now, and that's scan. We've built this step by step and scan. You may need to go over it again. This class does go through a process of being recorded, and so it's normally up within an hour after we're done. But it's pretty straightforward once you do it. But I'm going to go ahead and scan that right now, just through these S&P 500 sectors and indices. Oh, that's going through the indices. I just want the sectors alone. Sorry. I'm going to change this. Bad. I wanted to just go to this one. No, that is the indices. Okay, we're waiting for results. It's a little bit slow. I don't know if it's what's busy. Normally, I did it before. It was just like that. In fact, what we'll do is it's pretty quick. You guys should get it immediately on your screen. We're waiting for results in here, and normally it's within a second. Oh, actually less than a second. So it does happen sometimes in this demo account, but that is the correct process. Now, if I go over here, I'm going to scoot down, and I'm actually going to upgrade this to 500 companies. I'm going to hit scan again. Did you see how quick it did the S&P 500? We've got 225 companies. This is showing 225 that are above the 200-day moving average. I'm not sure why it paused on the sector. Don't know. It's only about 11 versus 500, and this one did this in less than, maybe half a second. But I want to show you the capability of that, and it does show you that here are all these companies that are above that area. Now, coming back to our charts here, this was energy. If by chance we wanted to see sector strength breaking down into stocks, all we have to do is pull up the energy in the energy sector in our scan tab, and I'm going to do that right now. I'm going to intersect that with energy right there, select all energy, and now we're just going to scan within the energy companies, this right here, within the S&P 500. That's it. That's all we're doing. So all the companies that make up this sector, what that looks like, ready to possibly break above the 200. We'll see. It's very close. How many of them have already broken above? Because you can be for sure of this. Almost always, if we're right at the 200 day, there's going to be some that are above it and some that are clearly below it. Which ones are above it? That's what this scan is going to do for us, and it's going to do it very, very quickly because all I'm scanning is in the energy now. There you go. See how quick that was? Literally, by the time I lifted my finger off that left mouse button, it was there. So there you have it. These are all above the 200-day moving average. This is where you've seen strength. Case in point, MPC, Marathon Pete over here. This company, let's go into our charts. I just hit on demand, on accident. It's so close to where I'm clicking a lot of times. There we go. Right here, I'm going to go into my regular just charts, looking at a 1 year now. And I'm just going to type in MPC over here. There it is. This is one that we actually happen to have a paper trade on, but you can see the strength of it. This is above its 200-day moving average. I'll show it to you right here. Got a lot of information on here already, but there's your simple moving average. But just quickly throw a 200 on here. I'm not going to worry about the style length. I'm just looking for where that 200 is right now. So let's go ahead and just click OK. There you go. We broke above it a long time ago. In fact, we gapped above it right here. And we've held that, and we're breaking higher again. Now, it was down a little bit today. Energy is a little bit volatile, but you can see that we are above the 200, and this scan helped us to accomplish that. All right, now I'm just going to scan for any questions that you might have about this, because there were a few things that we were looking at that I wanted you to be mindful of, folks. And by the way, if you are finding value and finding this discussion helpful, do me a favor, just smash that like button. Real quick and easy to do, just at the bottom of the video there. To the right of that, there's also a subscribe. Love to have you on board as a subscriber so this content can come up more frequently for you too, if this is resonating with you. Yep, and Wiley points out, absolutely. Yep, we've got online courses as well. And the nice thing is you do have a little bit of a feedback loop here where you can go back in and try to address these for you. Looks like Cam's got us all caught up. Appreciate that, Cam, in the chat, and we are ready to continue going. All right, is everybody ready to go forward? I think we're set. So let's go ahead and do a little bit of a deeper dive into, well, not necessarily a deeper dive, but once you have this scan built, you can go into any one of those and just find out what has been leading. This is the 5% PCT. This is one of the columns you can get. You can see these have really been moving over the last 5 days as well. So this can help show some strength. Let's see. Did we use the ADX? You know what we did on that? So a quick note, a great question. Anytime you go and click on the add filter up top here and go down to study, that's going to be the default right here. It just, because it's the top of the list. And what we do is we go right over here and click on the pen or pencil there. And the first thing we do is we hit delete. That way we can set it up. Now, if you wanted to do a scan on the ADX, you're set. Hey, it's already in place for you as soon as you hit the study. But down here, yeah, you want to add it. Condition Wizard, really, really powerful. I talk about this in my Thursday class. Of course, we don't have Thursday tomorrow. It's Juneteenth. It's a holiday, national holiday. But we build those indicators too. We have a class for that. It happens to be one I teach. And so that's probably one of the reasons why I'm showing it to you, because I've found some value out of ThinkScript and the Condition Wizard. It's very, very easy to learn the coding that way. Good to hear, Jay Richardson. And what's the tool being displayed? So this tool being displayed right here, this is referred to as the Condition Wizard that I was just in right here. So I'm gonna go ahead and clear that off. Watch this. I'm gonna hit delete. Okay, and then I can build, let's say, anything else I'd want to build in the Condition Wizard. Price going above a study going above a study, a moving average crossover. Just want to open your mind, kind of plant a seed as to what you guys can use. And some of the tools we like to use here just to get us what we're after and get us there very, very quickly. Okay, now I'm going to take this one off and just show you that the other tool we're using is this is all being done in the scan tab up top here. Now, you want to be in the Stock Hacker tool. Stock Hacker, tons of capacity here to give you, what you might be looking for. Of course, a lot of different codes can be created too. We've written code to look at divergences. I'm not going to go down that rabbit hole right now, but there's just a lot of capability there with it. Okay, and this is just a really cool one because it only took us less than a minute to build. And now once you got it, and you can save these too. You can save the scan if you don't want to keep, rebuilding it every time. Okay, so that's interesting. The other thing too that we talk about in this class is we do look at big picture, an understanding of like sectors and markets and what may be moving markets and where we might be seeing strength. One area where you have some individual stocks showing strength that we've looked at fairly recently, I'm going to go back to the sector grid here, was in the one we didn't get to it, but it was up top here, and it too has broken highs, and look where it's resting. Whoa, right at some highs. A little hard to see in that box. I'm going to right click again, just right click on the mouse, go down to maximize sell and left click there. There you go. Looks kind of like a bull flag pattern if you guys are familiar with those. A strong upward move followed by a consolidation a lot of technicians will anticipate. Prices breaking out higher, and you'll notice that it's holding right at support, very close to it. Why would industrials be so strong? Got a little line in here. I'll just draw along it. How about, we've heard of something recently a lot in the news, tariffs, right? Tariffs. Tariffs specifically. Now, we do know that companies in the U.S. might stand to benefit from tariffs because they're trying to reestablish a manufacturing base for necessities, right? Specifically around, there was a lot learned during the COVID situation. Hey, you know what? We do need to have some core industries here because it might be difficult to get from other countries. Anyways, there's been a big push to get that coming back and a lot of investment coming into the trillions of dollars. Now, what stocks might be doing well in this group? What stocks are in this group? How about that? We can start off there first. We already got this set up. We don't necessarily need to use this scan. In fact, I can keep it, well, I don't want to have it on there because I want to show you everything within this group, first of all. We're in the S&P 500. Look at this. Intersect with, right at the bottom, there's industry, and there you're going to have it. It's going to be industrials. And I'm just going to look not at all these sub-industries. You could certainly dig deep into each one of these if you want to, but collectively, all of these industries have collectively broken a high when you add them all together, and they're resting on that high. Is in terms of S&P 500 companies, maybe some of the more, I don't want to say necessarily established, but maybe some that are a little bit bigger in size that you're seeing here. And there you go. We have 77 companies that fit within the S&P 500 sector. There they all are, right at your fingertips. Folks, you can see what's been moving. Look at this. I love this because it tells me, yeah, hey, what might be weaker? Boeing was a recent crash, unfortunately. But yeah, you click on it again, just that's all you need to do. Click on it and it will give you what's been really performing over the last 5 days. Now, some of you may not have seen how to add these columns, so I'm just going to show you real quick here. I know we have a larger group of people here today that may be new. So because of that, let me just show you. Click on any column, right click, customize, right click, customize anywhere on any of these columns. There you go. This is a fairly newer indicator, PCT, beautiful. Percent, here they all are. What have been the percent changes? 1 month, 1 year, 1 month, I'm sorry, 20 days. That's kind of like 1 month as well. So I'm not sure what's going on there, but it's percent change. I mean, there's about 20 market days, 20 market days in a month. I don't know exactly what that's all about, but they got a 6 month in there too. Anyways, I chose the week. A full week's worth of data right there. And there we have it. Look at some of these companies. RTX, I believe that's Raytheon. Some of the defense companies, there are some wars going on. I think there are a total of 3 wars in the world right now. Some of these have been a little bit stronger as of late. Within this group too, and I pointed this out in the past, some of these that might be easier to understand. I'm seeing, and this is so cool too. Look at this. We have the sub-industry column. So this even breaks it down further for you at breaking down sectors. Boom. Okay. Beautiful. Look at this. Aerospace and defense, tons of it. And then you got John Deere. John Deere is one of the swing trades that we put on in this class. We looked at Caterpillar as well. Think about manufacturing companies in the US that might benefit from tariffs, because in this class, you can count on this each and every week. We'll try to look for macro economic themes that might be, what are the macro drivers out there that could be pushing different sectors, industries? Take a look. We saw industrials quite strong. There's John Deere. Okay, kind of holding above a range. This is one that we put on in this class. You can see that just 25 shares in terms of a paper trade, but you can see us holding above that 500, maybe going higher. Here is CAT. Now let's go ahead and put one on Caterpillar right now, just a trade, just a paper money trade, and expectation that this construction type of equipment, this is what some traders will look at. There's kind of a flag pattern. We've already broken out of that again. Will it come up higher? That's the question. I'm just going to put one under our belt before we do just a broad review of the markets, and then we'll be done here. But let's do this. So I'm going to go to the trade tab right now, or I could actually just click over on the, well, let's just do this. I click down below. I don't know if you knew that. I'll do it up top, but you can put the trade tab on the chart as well. Let's go ahead and just click on the ask price here for our paper money trade. We can put one on. I'm only going to do 25 shares. It's not a cheap stock. It's about $350 plus. So let's just do 25 shares right here. We'll go over here. We'll put a day order in. It'll be a limit order at this price. I'm going to hit confirm. Pull up our order entry. That the buying power effect is about a little over $4,500. Like I said, it's not cheap for only 25 shares. I don't have any potential exit levels or any targets on here. Just a simple trade just to show you how it's done. And we'll see if we get an order on that. But a lot of times what we'll do in this class was we pick up on these themes, and we truly try to do a top-down analysis perspective. There's your run-up in price. If we're looking at a bull flag pattern, we might see a similar move that's equal to this first. If that's number one, the first move, and this is our second move, we're trying to get them equal in price. That's what we look at for a sort of a head and shoulders pattern. I'll tell you what, yeah, that should trigger any moment. If I pull this down, it probably just gets in a little bit. I'm sorry, the markets are closed. That's right. This is, we've moved this an hour later. I'm used to a little bit earlier in the day. So anyways, we put the trade on for tomorrow. Okay. All right. That is right. Okay. Very good. Oh, it's been a long day in the markets. A lot of information out there. Before we're done, let's do this. I'm going to go up top. Got a few minutes left. And I'm going to take you guys to our standard review that we like to do each and every week because it does give us some great details in the market in terms of what to look at. You can see up top here, we do have the S&P we're looking at. Let me draw your attention to highlight a few of these that look of interest today. That is an advanced decline line of the NYSE. It's a little bit bigger, but we're looking at advancers relative to decliners on the day in total. What's winning, what's not. I will say this, that we did make a new high. The advanced decline line, let's do this. You got to be able to see the indicator for it to make sense. Can you see there's a new high there? A lot of times to get prices going higher, you want to have a large group. The NYSE is about 2,700 stocks. It's a little bit more than that last time I checked. But that gives us some market breadth. We did break higher. That all else equal is a positive. Okay, you want to see it break higher with prices. Okay, that is the advanced decline line, and that is an indicator that you all can add. Over here, though, it's a little bit different story. This is the SPX equal weight. Now, the SPX, as many of you might know, is not equal weighted. It is market cap weighted, right? There's a cap weighting to it, and you can see something like that right over here as you look at the Market Watch tab. Such a great way to visually see this. But what's really moving, let's say, for example, the S&P 500, you go under Visualize, sub-tab Visualize. See the size of these blocks? Look at the market cap here. Huge. NVIDIA, massive. Apple, Microsoft, a lot of tech, right? Yeah, Lilly's big too, and Tesla. You've got some market cap in there. But when you're looking at the SPX EW, which stands for equal weight, it makes all those boxes the same size, and it gives us a really good reference as to breadth of the market. How collectively are all these companies doing? And you can see that we did not make a new high. So it's good to see strength in the NYSE, but we're not, there's a little bit of a concern here that we didn't get a new high. If this starts to break higher, that could be a positive because a lot of times you want breadth. And what I mean by that is the sheer number of stocks out there that could be making new highs in the market. Now we got a couple more to look at. We have not got, this is kind of a special indicator that we look at, folks. This is the Omen, the Hindenburg Omen. These Omen spikes down here in red. I don't think that's by mistake. That's hey, the red is really bright. It's a heads up. It says, if you get a large number of 52-week lows and highs happening at the same time, it could represent a fracturing of the market, could create a chasm. And if you're making a lower low and possibly a lower high, that's the breakdown. And do you see it? Right there. You got a lot of these spikes, folks. We haven't had any over here on this move, which all else equal says that we're not making those 52-week new lows, and that's a positive as well. So big picture, we're still holding up. The trend is still in place. Things can change under this cycle of news cycle, but I wanted to throw that out to you. I've decided today to give you guys a lot of information just to kind of show you what we talk about in this class. Normally, it may not be as in depth. We did, this class was promoted and it's happened to be an FOMC announcement day. So we had that as well. Give yourself a pat on the back for sticking with this class. But folks, if there's anything in here that you want to review, again, this class should be up, assuming a review goes through and we can get this recorded in about an hour roughly. So you can check out some of these details if you want. Last one here I'm just going to highlight is our seasonality. It shows an average of seasonality, the red line, and this is really cool to add in, of the S&P over the last 10 years. And this is how it tends to move over a month-to-month basis, as you can see down below. We did, after the tariff dip, we started to come back a little bit, and maybe it will start to follow this. If it does, it can give us some ideas as to where prices will oftentimes dip and bounce. You can find all this under Style and then Chart Mode Seasonality and standard. Seasonality is where we're at, but standard would get you back to where we were. All right, everybody. We hit a lot today. We talked about the FOMC, a lot of details on that. Of course, I did tweet out some of those as well. I appreciate Cam being here to help folks. If you did find value in our discussion today, if you like this kind of content, find it helpful, yeah, just be sure to smash that like button as well as subscribe. It's been good being with you. There were no other surveys, but been a pleasure. And hey, have a great rest of the day. Enjoy your day off tomorrow, Juneteenth, and we'll see you all shortly.